Alrighty, TGIF, it is Friday. It's the end of the week. Let's take a look and see where we are this morning. Good morning, good afternoon, and good evening. It's Doc here from North America. Alright, what do we got going on? I can see some strength in the European equity markets. I see some strength, or they're just plus, I guess you could say. And a little bit more strength in the European markets than there was in the U.S. markets. U.S. markets are firm. Okay, personal income. Because the personal personal income spending came out to be, what's the magic numbers there? 6.8 compared to 4.7. Interesting. Okay, now they're breaking the numbers down. The core rate itself, it seems like it's 4.8. I'm trying to find out what last year's was versus. Okay. So the end result is things are getting expensive. I guess we needed the news to tell us that. That's pretty much what it comes down to. I think things are getting more expensive. How about you? All right. Now, there's the dollar this morning. You can see the dollar index on J4X. You can see it's still red in the Hinky-Ashkies for a second day. You see the green line. Let's move that mouse over to there. You can see it right there. You see the pressure's on it. It's breaking below. The fast stochastic is moving below the slow move stochastic. That pressure is on the product. And the Hinky-Ashkie bars are also doing their rollover. So combined together, U.S. stocks still kind of very firm. This is the end of the month, and not the end of the quarter, but the end of the month. So there's going to be some buying. Wouldn't be surprised if they sell into the close, though. So in other words, I could see it firm all day long. June personal consumption was 1.1 versus estimated at 0.9. So just 0.2% difference. When you look at Chicago Quant right here, you see the same situation. We've been rolling over. There's been lots of pressure. I'm not sure what that stuff's about. Let's get rid of that. And let's make that, what is that? Let's make that wider. See, did that really get into the buy? I think we're going to sneeze. Excuse me. Let's see, what is that? That is, yes, that got into the buy. Excuse me again. And you can see the pressure right there. You can see the weekly is still in the weekly buy. The only difference is you can see the blue dashed line is trying to make down. That's kind of like an echo. That's a 5 average versus our 3. This is why we're looking at the 3.5 as we highlight it right there. Pressure is on the dollar on a very mild level, not a large aggressive level. We're not that confident that they're going to push the markets, the dollar down whatsoever. As far as I'm concerned, it just seems like they find new ways to take it back up even more. Now let's go over to the chat line and see if anybody is in the house. I know I had it opened at one point, but here it comes. And the answer to that question is, there's Janos and there's Metho 2000. Hey guys, how you doing? So the dollar is still just kind of firm out of all this. I mean, we're seeing a little weakness, nothing major. We're seeing the stock indices in Europe much firmer than the ones in the United States. The United States is starting to, pare back, still in the plus, but nothing major. Like I said, if the Dow is not up like 300 points or down 300 points, I don't take it too serious. I consider it noise. The Tech 100 is up like 78 points here in the States now. It was up almost 200 points at one point. Asia had some problems. I know that the Hang Seng was down over 2%. A little pressure on it there. We seem to see the Dow is only up 4 points now. So it's really getting close to going into just the zero at this point. What else can we see here as we look around the neighborhood? Nothing particular. Nothing's jumping out. Why don't we do this? I see the cryptos are feeling a little pain this morning. They're knocking them down. I'm seeing 7-year yields at 2 3/4, 10-year yields at 273. So the inversion is still going on. I see the 30-year in the U.S. is trading at 3.6. So they're all hanging out in that 3 area. Bitcoin trading in the 23,500 area, down about 400 points. Nothing major there. I see the euro feeling some pressure. I see CAD feeling some pressure on the positive side. It's going down against the dollar, so that's bullish there. Overall, just kind of smooth, Mexican peso kind of flat. Let's take a look at them. Let's go over to the... let's actually take a look at the individual pairs trades. So let's go right to the Swiss to start off with. Right there. There we go. You see all that red going on. You can see how the green fast stochastic has been battling to stay down, not even getting through the range here. So obviously, it's been very clean and clear, telling you that there is weakness, which is a bullish thing because this is against the dollar. So we're seeing the Swiss franc showing strength against the dollar again. Now let's take a look at it over here on Chicago Quant, right there. Pretty much unchanged, up a little bit. It's been in that sell since here. We are flirting with a third week in the sell. You can see the shadow, what I like to call, or the echo. The blue dashed lines kind of breaking down again, and you can see the histogram and the green line below, and below the manifold as the manifold tightens up. So overall, we're seeing that pressure there. Yana says, can you look at the classic euro? Yeah, dollar. Let's see what that does. Right there. You can see it's trying to break down a little bit. But our daily buy is perked up. But again, we're still stuck in that weekly sell. So here it is Friday. Doesn't look like it's going to do anything really that positive. But there's a little bounce going on right there. And we put these fib numbers out there just to take a look at from the bottom end of the old range to the new lows below the par. Now it says, people that have listened to my advice to switch to the dollar from the euro in savings have gained 17% in euro terms. That makes sense. Well, you're right. You're dead right, Yadis. It's that's the way it has been flying, and it doesn't seem like it's going to stop any. That's why we're watching the Fibonacci now below the range. I don't know if it's going to find like the 97s or what. How many times have we heard over the years and decades now, where what would be the best price for Spain? What would be the best price for Italy? What would be the best price for Portugal? What would be the best price for Greece? Of the euro against the dollar. And the numbers that's why they called them the pigs after a while. Portugal, Italy, Greece, and Spain. The southern states, as they called them. How they were very pressured to have a euro trading at like 110, 115, 120 when they said, they should, for those countries, they need it down into the 50s and 60s. Damn the pigs. Yum, but they do taste good, Actually, except diesel, gas, and car and food. Yeah, I know, when they go into the inflation thing. Even the euro inflation, that is profit and purchasing power. Yeah, I know. Yeah, I hear you. I think overall, probably a euro in the high 80s, low 90s would be more fair to all the states in the European Union. I think that would be it. It would put pressure on Germany and some of the northern states, But overall, I think that would probably be close to getting into the fair area. I've seen numbers where they say like Portugal needs like I guess it was Greece, might need like a 27 euro. That's right. Not just 1.1, but just 0.27 underneath it. That much, down 75% where it's at now. 73% where it's at right now. That type of thing. So there's the whole structure of the European Union has been very sloppy. Maybe because of the fantasy in a lot of people's heads. We're talking about as traders for decades, since the 80s, since the 1980s, we've been talking about, getting rid of the French franc and getting rid of the Swiss and getting rid of the Deutschmark and so forth and getting a euro unit, right? And so what we saw in the end result is that we got the euro unit all right, but with it came some other baggage, and it just in other words, the spending and so forth. Way before quantitative easing, they were doing things that were hurting the economies and blocking business and blocking growth, and just all those things that make an economy go sideways. Create what they call stagflation, which we're starting to develop here in the States. So, I would say that I wouldn't be surprised if we found, in the end, the euro hanging around between the high 80s and the low par, like 103, 102. We may not see a 120 or 30 for a while again, just because of the spending and the legislation. I saw one group in the European Parliament 2 days ago asking for something. I was like, is that the headline even right? In other words, it was very bullish on business. And I was thinking, they're not going to get that passed in the European Union. Forget about that. Monetary policy is too loose. Yeah, way too loose. Yeah, it's a dilemma, a total dilemma. So, let's see, what else can we say about any of this stuff? I guess at this point in time, there's your euro, and you can see that pressure on the euro, and it's even down for the day. Just whereas the Swiss, the money is obviously running towards the Swiss, because when we go back to the Swiss is actually no, it's up. That's right. So it's doing the same thing. I just realized that for a moment in my head. I was thinking the Swiss was going up, but that's not. See, so they're showing a little strength in the Swiss. No, I'm sorry. Let me rephrase that. They're showing strength in the dollar against the Swiss. That's what it is, and we're seeing the same thing in the euro. And let's see what it's doing with the cable. Now the cable did the same thing, made a new high, and is paring back. You can see it right there. There's today's euro. I'm sorry, cable. What is your outlook for the euro and the dollar in August? Well, I'm really convinced that we're going to get sold down out of this whole thing. In other words, the buyers have been letting this thing go up, and I think that they're going to be selling the market down. So I would imagine, usually, was it with a weak stock market? Was it the dollar? Well, let's take a look at it. With a weak stock market, we've had a strong dollar index, I guess you could say. Let's go back over to it right here. Let's throw the dollar index up. We probably should do like a double chart, where it shows you the dollar. So you can see here, the dollar has been climbing as the stock market has been selling off since all of 2022. Okay? So the dollar's been going up. Now we go over to the stock market right there. That's not the stock market. Let's go back to that again. And it's the opposite direction. So I'm thinking that we're going to get back into that groove, and I think we're just seeing a dead cat bounce at the moment. That's pretty much the way it looks. Now there's the beginning of 2022. You can see the S&P 500 was up here. It traded its way down to here. We're in a bounce right now. But are they going to take out these highs? I don't know. And I think that and today in particular, I think that it's the end of the month, so they're going to do the buying. And then maybe at the end of the day, they find a way to sell this market, sell into the buying. I'm not that bullish for the, I really think we're going to need to see some real positive political news. And right now, our Congress, the one Democrat that was blocking things has stopped blocking them, and they just put a spending bill up, and looks like they're going to spend a little under $1 trillion. I mean, every time you turn around, and they're calling it the inflation fighter. So they're going to spend it. They're going to print another it's like 870 some odd billion, and spend it. And they're raising taxes. They're raising taxes, printing money, and they're spending it. And they're calling it the inflation fighter. What do you think of that one, Giannis? I want Giannis to say something about that. That's like, I don't want to say it. Simple. They are dumb. Thank you. I didn't want to say it myself. Exactly. Exactly. It's insane. Like changing definition of a recession. Yeah. Oh my God. I heard, I guess, what do they call it? Wikipedia? They had to freeze Wikipedia. I understand that they tried to change the definition of a recession 50 times yesterday. Wikipedia had to freeze it and not let anybody change anything on that particular thread. I know, it's insane. Totally insane. We are in a bad spot. We need leadership plans way out intentions. Yeah. Not this nonsense going on. I told you I saw in the States, I think we're going to get cleaned up. There's no problem there. We're going to see a big change in the United States. But I saw something 2 days ago. I forget what it was. And I was like, my heart got warm. I was happy. It was coming out of the European Parliament. And I guess the conservatives were pushing for some legislation. I guess they got it through committee. And it's like fiscal responsibility. Now, I doubt that they have the votes on the floor to begin with. But it was nice that the adults were actually functioning in the European Parliament over the last couple of days. We got hit by a COVID stimulated the economy. It was clear that we would have to pay for all the stimulation. Yeah, that's what we're seeing now in the inflation, that's for sure. Note, it is simple. The time has come. More people supposedly survive. Now we have to work for that chance and payback. Exactly. That's exactly it. Matter of fact, there are people over here that have been posting stuff like, great, got that $600 check, and we got that $1,200 check, and we got that another $600 check, and now we're paying like $7,000 more in fuel and food, and we would rather off not had that check. That's what it comes down to. Sip of the water. So yeah, you're right, and that's what we're going to probably see in the States. And I don't know what they're going to do with the European Parliament. It's always a guessing game with them. In the end result, the socialists seem to control the Parliament. So we're not really going to see that much of a change in Europe yet. But I am so happy to see Eastern Europe, get into the grip of this and start fighting with these crazy socialists who just want to spend money. Yeah. They don't understand you have to pay for it in the end. Someone does. Someone has to pay for it. I don't know where they got this fantasy, but it's just a bad one. No success in history on it. But they just sing that song all the time. So anyway, that's pretty much how I feel about it right there, is that the dollar will be more firm going into August and September, and the stock indices will be weaker. I think that's how it's going to roll. And I think there's as you can see, let's just put the stock index up on both the J4X, and there it is on the Chicago Quant, and let's put it up on J4X. And what we're really seeing in the end result is that, where is it at? Right there. Let's see. Hey, Robin. Bad part is that that energy and food are at the top of the price surges. Oh, I know. It is an inflation from that. And, we're just waiting to get, I woke up this morning, I turn on the TV, and I'm doing my work, and what do I hear? First thing at 6 o'clock Eastern Standard Time, in other words, 2.5 hours ago, almost 3 hours ago, I hear someone say, it's 102 days away from the election. That's it. Right off. It doesn't stop around here. The election is the primary train of thought at this point. They want to see them remove these incredibly horrible ideas that are making everybody so frustrated with food and energy and just everything in general, clothing and manufacturing and taxes, and it's just it's going to change. It has to. And as you can see there we have been in a weekly buy for 3 weeks right there. You see that right there on Chicago Quant. You can see over here, there's the weekly. We've been in the green for 2 full weeks. You can see it's coming up towards the top end of its range. So there could be the pressure that we're looking for to come into August, into the September. You know, we'll see that pressure pushing it down. There it is right there. So from there, let's see, where are we at? So, all right, so we've done, oh, did we look at the cable? I started to look at the cable. Let me just take a look at the cable again. I know I was starting to look at it. It was holding up. There it is right there. Yeah, so it's still holding up in the daily buy now since, I guess, July 18th. And our weekly is trying, but it's not doing the job at the moment. Maybe next week we start to see some strength in it. And that's pretty much where we are. Now let's drift over to the euro, the Turkish lira euro pairs trade. Oh, let's take a look at the dollar first to see if it's busted the 18 area. It's been dancing with that for 4 or 5 days. That's close enough, that's for sure. It's getting close. Today's high was 1803, almost 04. 0377, so almost 04. So we're not seeing any major new policy information come out. They're making new, all-time highs. I imagine we're seeing some pressure on the Turkish lira, the euro Turkish lira. And it looks like it made a new high from yesterday, but it's already trading just a little bit under for the day. You see it's been in that daily buy since here, and it's been in a weekly buy since here. So the pressure is still on that, too, at the same time. We find the Turkish lira, euro Turkish lira, obviously the better pairs trade compared to the dollar. The dollar trades more like a dollar. Turkish lira trades like an index. So, and so far we're not seeing any news come out to defend against the Turkish lira again. So, I mean, last time that hit 18, we were projecting 18, and that's what happened. It ran up to 18, and the government came out with a new policy that gave out free puts. And then notice that it lasted, a couple of weeks, going into a month, and then it climbed right back into the weekly buy. Where was it? That's the euro Turkish lira. Let's go back to the dollar Turkish lira. That's what we're talking about right there. So there's that move happened. It went up to the 18. They changed policy, gave out those free puts, and it lasted in a sell for about 3 weeks. Didn't go anywhere, and then we went into a weekly buy, and it's been in a weekly buy ever since February, second week of February. It's been in a weekly buy, and what has it done? It's gone from 14. Here we are at 18. It's a big move for a currency. That's a lot of inflation. I mean, they're saying that the inflation in Turkey is like 180%. So that's pretty much where we stand now with that. We'll go from there to the Canadian. Take a look at the Canadian dollar against the U.S. dollar. There it is. And you can see there, it's up for the day, but we are in the sell for the third day. The pressure is on. We are in the weekly sell for a second week. And looks like it may close there unless they really pop this thing today. What else can we say? It's really kind of stuck in that chokehold of a sideways market. Let's put it up on J4X. Right there. There we go. Some call it the chop. Yeah, sideways action, the chop. Bulls and bears get chopped. Bulls make money, bears make money, and pigs go to slaughter. Slaughter. So, that's my pig swirly. I had my pig swirly. And that was popcorn. Popcorn talked like that. Swirly got beat up by popcorn all the time. One was the runt of the litter. The other one was the biggest one in the litter. So that was popcorn, and popcorn would beat up on Swirly. Both girls. So from there, that's about it on the CAD. You can see it. And just because it's trying to lift up, I'm assuming that oil could be playing with the downside. So let's take a look at oil. And there is crude today. Yep, down a little bit. Nothing major. No, it's up. So that's yesterday. So yeah, look at that. Oil is up, and that would normally, normally push it into downwardly action. We usually see that about 85% of the time. So we're a little surprised. Nothing major, but we are a little surprised. We are still in the sell, so this could be just dead cat bounce going on, and next thing you know is by halfway through the day we find ourselves down lower. So you got to give it some time to breathe, like a fine wine. Let's see. I'd rather be a pig nowadays. Get slaughtered and learn. Pulled pork. Yum. What else is there? I guess that's about it. At this point, I don't know if slaughter is the answer, but we know one thing for sure, and that is that it can't keep on going on the way it's going. Let's put it that way. We both know that. So sooner or later, this is going to have to change its characteristics. They're going to have to do different things. It's got to stop. It definitely has to stop. All right, let's see. From there, we take a look at. So we go to here. We go like this. Put the gold in, and we did switch to the December gold contract. There it is. Now we'll take a look at the South African Rand. Right there. It's been finding a way to go down. And gold has been going up. Let's just show you the gold again right there. It has been going up. Now let's shift over to... Where's it at? Right... Where's the czar in this thing? Why can't I find it? I thought it's at the bottom. There it is. So there's the South African Rand. The pressure is on it, but it's down at the bottom end of the range on a daily basis. You can see here on the gold, on Chicago quant side, gold is lifting up, and this thing is going down. This is, I find the South African Rand always more insightful than Canadian and oil. I find that the South African Rand, takes a position, and the gold usually follows it, whereas the Canadian and the what is that? If anything could play you in a movie, who would be it? Wall Street. Money sleeps. 20th Century Fox. Oh, okay, she's talking about something. I'm listening to business news at the same time. So, you see here South African Rand doing its job, doing what it should be doing, and gold has done. Since we did that webinar a couple days ago on the pairs trade between what do you call it? I lost my train of thought on that. What was it? We were looking at the gold. Oh, I know. It was the pairs trade between gold and silver. That's it. So gold, since we started talking about that on Monday or Tuesday, gold went from 1733-ish area to trade up to 1774. 1784 is the high today. So from 33. So it picked up, basically like $41. Then let's just jump over to this because it's so much fun. Then at the same time, we pushed on the idea that you want to start thinking about buying the pairs trade instead. And that we thought we're at the low end of the range now, or the high end of the range being 100 and something. 101, something like that. And then let's take a look at silver. Silver has made a wonderful move. It picked up right there it is. So silver went that same day, went from 1832 close to today's high of 1982. No, what am I saying? 2021 from 1832. So that picked up $1.70 and change. Now, obviously, you multiply that by 100, and that's a lot more money than the $44 by 100. Obviously, the traders were paying attention to what we were discussing, and we saw it happen. It happens once in a while around here too. I've seen us do that. You know, we see something major in like one of the currencies, and next thing you know, the money seems to be rushing into it. It's like my old days when I used to be with John Bollinger. We used to do the Guru Review, and I would say something. Next thing I know, to see the market move. It's like, whoa, I don't want to be moving the markets. Where else is there? Okay, that's about it when it comes to looking at those two particular currencies, Canadian against oil, gold, and South African rand. Now let's drift over to the yen. Where are you, yen? There it is. There it is, right there, the yen. And they made a nice spike down, and now look at it, it's coming back strong. We're in that sell from here because there was a red and a green there, so you know, tried to lift across, but the red and green held you back from flipping. So it's been in that sell for 3, 4, 5, 6, 7, 8, 9, ninth day now, and we are flirting with the weekly sell too as we speak. So that pressure is on that. Nah, I haven't talked to him in a long time. He was getting too comfortable. He was like, you know, Murray, you got to go talk to Nissan. You know, the head of Nissan had just come back from Japan. He was taking over for technical analysis for Merrill Lynch back in the 80s. He said, Nissan's having problems. Maybe you can help him. And I'm thinking to myself, why do I want to help the head of Merrill Lynch? You know, all they're going to do is end up, you know, giving me problems in the end. So John kept on pestering me about it, and then finally I said, all right, next time I'm in the World Trade Center, this is back in the 80s, he's like, and you're in the World Trade Center, I'll go, you know, I'll stop in. You know? Strange time we live in. Oh, yeah. And so I have had a talk with him. He's active on Twitter. Yeah, well, he's got his Bollinger Bands he's pushing. He's a good trader. You know, he started off as a cameraman. He was a cameraman on CNBC, or yeah, back then it was FNN, the Financial News Network, which merged with CNBC. And he was a cameraman, and he you know, he thought, geez, I can do this just as easily. I could be in front of the camera just as much as I'm behind the camera. And so, you know, you had a technical guy get involved, you know, somebody that really rolls up their sleeves and does work, you know. So, yeah, he wanted you know, for me to talk to Nissan. And when I got like up into World Trade Center 5 where Merrill Lynch was, and I realized, I had finally said to myself, why am I going to talk to him? Why are you being so nice? So I go up there and introduce myself, and I talk to him a little bit, but I did not help him. I mean, I tried not to. I might have helped him a little, but he was having a hard time using candlesticks in the United States versus using them in Japan. He was complaining to John about it back in the 80s. And we did this. I used to do this show, the Guru Review. Every 2 weeks, I'd come on live TV and talk about the markets, you know. And that was John's show. So, I would go to the Market Technicians Association only because a friend of mine was president of it for many years, and so, matter of fact, they couldn't find anybody to be president of the U.S. Market Technicians Association, so they always made him president. And he was like, "Oh, I don't want to do this," but no one else will take it. And so I'd go to their meetings, but I would not really talk about my math. You know, I'd talk about the markets. I was a floor guy at the same time, so they were just happy to talk to a floor guy, let alone talk to a market technician that, you know, had some really good mathematics, you know. So I don't use Twitter. I call it the sewer. Until Elon Musk buys that thing and fixes it, I am nowhere near Twitter. So you read about someone in a book and can call him up in 10 minutes if you want to. Yeah, but that means sharing my math and ideas, and I want to share them. I do it on Dukascopy. How many people, Giannis? How many people do you think are really paying attention to me on Dukascopy? I mean, obviously the ones in Switzerland were. They were the ones that reached out to me and said, we want you to stick around. We'll take care of that money situation. But yeah, I mean, really, I'm happy just to do Dukascopy. I just want to get my ideas out. I don't really care how many listen to them. I just want to get them out there. Yeah, exactly. Exactly. When I go into the repeats, I see there's like 23, 34, 28. Once in a blue moon, you'll see like 50 something. I'm happy. I just want me to be documented, recorded, of my ideas and what I see for the 21st century, the 20th and the 21st century. That's it. I'm not trying to convince anybody. I like to trade myself. I don't need to. We have Robin and I have the service, and we try to make that grow. The Chicago Quant service, but and it keeps the customers. We keep a pretty high percentage of our customers, but overall, I'm just happy the way it's going along. I mean, we'd like to have more customers, but that's about it. It's a process for sort of, yeah. But I don't have much of it. I've never been a big sharer of the technical work with the other technicians. That's why I don't belong to the Market Technicians Association. So, I guess it's a marketing thing in some way, some type of thing. But I'm more of a trader in the end, And Robin and I are trying to make the service. Would like to have 3 times more of the clients we have. I think that would be a good number, or 4 times more. That would be nice. 3 or 4 times more. But overall, it's we're and right now is really bad anyway. I mean, who's really working? OBOI. Hey. So, I mean, right now what we're watching is, everybody is standing there. You got a dead cat bounce going on with the stock markets. You've got the political season being dragged into the arena every day. I've never seen, for 2 months now, that's all they do is they talk about the election. I mean, money is terrified. And they're trapped. A lot of people are trapped in products that have not bounced, Yeah, let's see what's going on in the pairs. Where'd we leave off? We left off at the, I think it was British pound, right? No, the yen. There's the yen. I really think this is the canary in the coal mine, the dollar-yen pairs trade. I think that is the best of them all. And then from there, let's look at the south of our border. Let's take a look at the Mexican peso. And there's the yen on the J4X. You can see that. It's down at the low end of the range, so we'll see how that plays out. If it doesn't turn around and start to move back up. And then here is the Mexican peso. And if anybody would like to see any of the other pairs, shout it out. Yeah, but markets are markets. Sometimes you don't know where you don't know in the end. Sometimes when you go off topic, you don't know how much that might bring you to a solid topic down the road. A couple hours, a couple minutes, a couple days. You just don't know. And then let's take a look at it over here. And there is the peso. Right there. Now the peso's kind of playing with that range. It was playing with the 50 percentile and it got up to the 76, and now it's flirting with the 23. It's kind of bouncing around with no real clear direction. Yeah, again, though, I really do believe sometimes you can go off topic, and it can bring you to a whole new, area of looking at things. Someone might mention some particular pairs trade, and we'll go and take a peek at it, and it might show us. Or someone will say, "I want to look at something like you did. You asked and said, 'Hey, what's the dollar going to do and over the next couple months, and then you can see I'm bearish on the stock market. I think this is a dead cat bounce. So more than likely, we're probably going to see a weaker euro and make new lows. That's probably out there, especially with it staying in the weekly sell constantly and refusing to get into the buy. I mean, when that happens, you know, it just tells you that the overall theme is down, not up. Now, that helps out the pigs in the end, you know. And maybe that's part of the game at this point. I mean, I heard... How much have you heard of this? I heard that Italy's seriously talking about leaving the euro again. You know, so what Italian Brexit or Exit. Itzik. I think didn't they post it as Itzik at one point? IT exit or something like that. So that's a good chance that we're going to start seeing that. What's that do to the euro again? I mean, you know, do they have to shrink down the participants in it to straighten it out? Maybe that's how it has to play out. All right, that's all the pairs we look at. Now we'll go finish off the metals complex. And there's the silver, and as you can see, it's kind of down just a little bit or unchanged. You know, it's holding up, but it's not in the weekly. Maybe next week we get into the weekly buy. And we saw gold, same game, same situation. And then you can see copper, same situation. That weekly is being held back. And it's been in the daily buy for, I don't know, 6 days now. 5 days for sure. No, 7 days. 1, 2, 3, 4, 5, 6, 7 days. This is the 7th day. So it's trying to lift. I don't know. Do we have an economy, a global economy that can actually, you know, buy copper and grow? That's the bigger question, you know. Then, let's see, where do we go from there? Let's go over to platinum, see what platinum's up to. Now, when we see platinum in a weekly buy, then we know we're going to start to see some real strength. And there it is. I had that box in there at the beginning of the week. There it is. You see that. The platinum is flirting with a weekly buy as we speak. So, I mean, last time we saw that, we saw gold really take off. And we saw silver get up into the 26s. So, let's keep an eye on that today. Maybe platinum. Obviously, if platinum goes out above the $882, more than likely we are in a weekly buy with no problem. Could be even 880 could do it. We'll have to see. And that's where we are when it comes to the metals contracts. And we kind of been saying that we expect to see some real positiveness in the next month and a half that should kick out in it. And the pairs, the gold silver ratio should really become a very profitable play on the silver side of it. That's what we're looking at this point. All right, from there we'll go over to the energies. And there is the front month. You can see that it's broken through the century mark again and backed off. We're trading in the, where are we at now? 99.90 bid. Basically almost par. Offered at 99.91. 88s are offered. 87s are offered. 89s are offered. You know, so you know, it's hanging around the century mark. Over on J4X, let's see what the Brent is doing. We were kind of surprised yesterday that the Brent was acting as weak as it was. There we go. You can see it's jacking itself up. A couple days ago, it was up in the 107s. Yeah, high was 107.76. And yeah, you can see the action that's going on in this product. And right now we're at 105 and change. This could be very, very interesting. You know, the oil market, I have a hard time. I know that it's slowed down with the concept of recession, and now it's kind of firming up on the idea of, again, the concept of a growing economy. I think they're just fooling themselves all the way around. And that's pretty much the name of the game there. Let's see. From there, we drift our way to... where do we go from there? we go to gas. Let's see what gas is up to. So U.S. gas was moving down a little bit. I don't remember what I sent over this morning to Robin for the Chicago quant clients, but I think it was still down. Let's see. Where are you? There it is. That's U.S. Yeah, we're still moving down. You can see it on J4X. 2 reds in a row. Green line below the dashed. And over here. And we're looking at the September contract. It's lifting up just a little bit right there. But it's in its sell from yesterday. And it's been in that weekly sell since back in here. So it ran up to where it went into the weekly sell. Topped out and is trying to break down again. And that's pretty much the action we're seeing in the nat gas. Now let's see what unfortunately what the Europeans are paying for that stuff. We saw yesterday it did get into the 27s. We are cheering for that, and we know that there is no cheering in look at that, 28.63. No cheering in trading. Oh my goodness, they just only if we could sell them natural gas. Mr. Biden just hates the idea of selling them natural gas. He's a weird guy. Very weird guy. So from there, where do we go from there? That's it. That's pretty much the energy sector. It's kind of, done its thing, I guess you could say. It's kind of made it very clear what it wants to do, and that is it wants to go up, unfortunately, and that's because of the lack of responsibility by the politicians. Nothing more than that. All right, from there we slide over to the stock indices. Let's take a look at some of these stock indices, and there is the Tech 100 trying to break down a little bit in here now, and you can see, but it's still in a daily buy and in a weekly buy. So today, a lot of funds will be buying for the end of the month, and that'll perk things up. And I would think there'll be anything that I guess we could Jack's swim. I think that what happens is that when you look at the markets and you look how the funds are using the markets, okay, and what they do is they let's say. I'm very comfortable with $2 billion. So let's use the $2 billion example. And that is that what happens is that you have maybe these funds in that area with $2 billion and probably have like 24 stocks, 24 different companies in their portfolio. And then what they do is they buy equal percentage of each one of them, percentage-wise. And so in dollar terms, that is. Not in stock, not in volume. And so what happens is that when they get out of whack on the upside, they go and sell some of them and lighten up. So they decrease the volume, but they keep the same amount of assets invested in that particular stock or product. And so I think that's where we are now, and that is that the markets are trying to take some of that profit. So anything that's moved out of whack is more than likely going to be sold today. And now we see what Apple's trading at 162, and it traded down to 140 or 138. Let's put Apple up on the screen here, and we'll use that as an example. There it is right there. So there is Tesla. There's Apple. That's from their earnings yesterday. We've been in a buy for 3 days now. This is the third day. Or is this the fourth day? Yeah, it's the fourth. No, that's today. That's reflecting today's trading. So this is we can get rid of that. We don't have anybody following it, so I don't keep it filled in. Right there, and there's the buy. And it's been in a weekly buy since back in here. Back in the 140s, it went down into the 130 area. So you have to assume that there's a lot of funds out there. They've picked up 30 some odd dollars. It's like 1 what is that? How much is it? From 130 to 160 percentage wise is you're talking about 20 some odd percent, 21, 18%, right around there. So you got to figure that they're going to use some of this strength today to sell into. And the ones that do follow the product, as a fund, and are long it, of course, that's why they follow it, are probably going to be lightening up as there's strength in there. Now you can see we're in a weekly buy, so it's not exactly something you want to short. All you want to do is take your profits too. All right, where do we go from there? And that's pretty much the name of the game. So in other words, someone who has a portfolio and has Apple in it, they're going to be wanting to lighten up on it. There's going to be other funds who are not as invested, and they're doing window dressing. So let me tell you about window dressing. Window dressing is really appalling. It's horrible. It's evil. Okay, and what it is that a fund will go buy a particular stock they weren't really invested in. They might have only had like an incredibly small amount or no amount. What they do is they're getting close to the end of the quarter. In this case here, they're just finishing off the first, they're going into August now. So we're going into the second month of the quarter, is it? So Jan, Feb, and March, and then April, May, and June. So the end of the quarter was at the end of June. Okay? So we're going into the second month of the third quarter. And what they do is they start the window dress. And what that means is that they were underinvested or not invested in some of the most aggressive stocks out there. So what they do is they go in and start buying this stuff up here. And they will tell people, like, they had their average at like 135 or something like that, or 132, where the stock traded down to 129. They'll say, we're working on averaging in every day or every week. And what they do is they window dress. And now they're buying up at 160, and they'll pretend when they write their letter to the investors, they will act like as if they've been long their whole position in Apple at 129 or 131 or something like that, with it trading up here at 160 something, right? And so they will act and publish it like as if they've been invested all along, when in fact they haven't. So they refer to it as window dressing. What they do is they step up, buy it here, increase the position that they're in, and tell everybody that they're low numbers of buying it, like 129, but they were underinvested. So it doesn't matter if you buy it dirt cheap. If you're underinvested, you're underinvested. In other words, you don't have the equal amount of equity invested in that particular product, whatever it is, be it the Apple or whatever. You're window dressing. And so that's what window dressing is, and it's very despicable as far as I'm concerned. Can I get a hallelujah for that? There you go. All right. So from there, where do we go? Let's see. There's the currencies. I guess I can shut that out. No one's asking for any more currency pairs for the day. And let's go over to, where do we go to? Let's put that in there, right there. I guess let's go finish off the stock indices. You can see the three of them right there. The Dow Jones Industrial Average is in the middle. Oop. Let's fill in there. Hallelujah. Praise the Lord and pass the ammunition. All right, so over here on the stock indices, there's the Tech 100. You can see it's doing its thing. It's been in that buy and all, and it's been going up. And we went into a weekly buy, it goes up. That's usually the way it works. Go in a weekly sell, it finds a way to go down. There's the S&P's, the same situation. And obviously then you can see right here on the Dow Jones Industrial Average, which is doing obviously the same thing also. They're showing that buying, but I'm not convinced. Like, look, 3,300 or 33,000 on the Dow. You would think that they would find a way to get up in there, or what's that, 34,000? I'm not sure if they can do that. We'll see, but I just don't believe it. I have not heard that phrase for some time. Praise the Lord and pass the ammunition. Oh, yeah. Oh, yeah. So, yep. Oh, that's all we talk about around here. How much more ammunition we can buy. What it really comes down to now when it comes to these stock indices is that's what they're going to do. They're going to just cruise. And we'll see if they top out and we go into a weekly sell next week. All right, we got to come up with a title. What should we call? What can we call this particular webinar? We talked about the pairs trading or the gold silver ratio. We started off talking about energies, and we saw the Turkish lira being God. You know how else can you describe the Turkish lira but limping along like a wounded animal? I'm trying to think what else. What can we talk about here? What should we use as a title? You had a good one a couple days ago. What was that title you had a couple days ago? It was going to be a thumbnail. Then we ended up using some of the other things instead. I'm trying to think it was. It made sense at the time what you were talking about. The thumbnail. If you can remember. If not, we'll come up with something. I guess that's about it, traders. So this is Doc from North America. Have a safe and smart weekend. Watch out this afternoon. It'll be late evening for a lot of you. You'll be drinking your adult beverages, you know. So you be careful, be smart, and watch out for some weakness at the end of the U.S. market today. We'll see how it plays. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Be safe, be smart, traders. Catch you later. Doc over and out.